Hello, hello. Back with you with recap today, September 24th, 2020. Let's go over today's trading day and what worked, what didn't work. Let's review our watch list and let's see what happened. So let's start with the markets first. Overall market conditions, not a bad day. It looks like we're kind of put this into a 15-day pattern right here. Looks like after this kind of decimation that we've been on since, um, early parts of, where was our uptrend here? It was back. Let's go back even a few more days. We were uptrending towards the end of August. Let's put a 5-minute chart. Yeah, so right here, you can see we're uptrending all the way until the beginning of September, end of August. And then we've just kind of had this massive crash and just kind of hung out right here. So looks like we found some kind of a interesting bottom. Might not be the complete bottom, but the markets are spiking. So today was a fairly decent day. Finished, 1% up on the day. Not a huge move on the markets considering how much we've dipped, but nonetheless, we weren't crashing any further, so that's a good sign. Taking a look at Dow Jones, similar price action, positive on the day, and the S&P, same thing, positive price action. So to no surprise, these stocks are spiking in the morning, which is why the indices are also spiking. So we were talking about SPI, SUNW, and POLA. Our trade today, our only trade, was on SUNW. We got in at 948 at 670 and got out at 953 at $8 per share. We were filled at 604.8, so 804.8. So a little bit higher than our limit order that we put in. Some of you may be wondering why we're trading with such a small position size. Well, there's a couple reasons for it. First of all, the biggest reason is that we got to cater to the clients that we're serving. The majority of people, when they start out at first, they don't have a lot of money, right? So in order to kind of cater to them and show to them what's possible, it's important for us as the group that they're working with to show them that even we are doing the same thing. It works for us. This right here is a $670 profit in 6 minutes. I don't know of a single profession that offers a rate of $6,700 per hour unless you're some kind of a high-time executive or CEO. So this stuff really does pay if you pay attention. So we want to show what's possible, because if we go and start working with 50,000 shares, that is that relatable to you? No, because your complaint to us is going to be, oh, well, I don't have $40,000 or whatever to work with, $30,000 to work with. You only have 4,000 or 5,000 to work with. Okay, so we've got to cater to that. But it's important for you to see what's scalable. If instead of 500 shares, if it was 5,000 shares, this would have been a $6,700 profit in 6 minutes. Okay, so our only trade, let's take a look at SUNW. We alerted on our watch list. You can look at the time of our watch list, 12:47 a.m. on September 24th. Went to bed late last night, so this was alerted. And what we're talking about is a morning spike is extremely on all these three stocks. As shorts have been riding them down from the highs. A morning spike breaking past key consolidated areas would be a good place for an entry for us with good volume, and important to be patient with these ones. It might be a Friday afternoon squeeze, keeping in mind overall markets. So SUNW and POLA, POLA, look at the SUNW chart right here and look at the POLA chart right here. Very identical, the morning spike that we're talking about. Right, so very, very, very nice price action. Let's put in our 1-minute candle. Let's go and review SUNW. So what were we seeing? What caused us to enter this trade? Well, first of all, nice pre-market action. We caught this yesterday on the percent gainers, saying that this thing likely has a lot of shorts in it. So a spike on the 24th was very likely. That's exactly what we got in the morning in the pre-market. And then, as usual, pre-market action usually tends to pull back. And what did we see? We saw this spike right here that led to a halt, followed by another spike, which kind of ended up consolidating here right above the consolidated highs. Okay? Granted, we did have some resistance here in the 780s, and the 8s. Okay, so we're absolutely mindful of that. But the consolidation was holding for an hour and a half in the range between like the 580s and the 450s. So the moment this thing could spike above that and hold above it, it was a convincing entry for us. So we got it at 948? Yeah, so that's the time it was posted. So 948, 949, this time range right here at 670. And a little bit of, dipping price action, a little bit of indecision. Our losses would have been cut somewhere down here around WEWAP if it would have taken WEWAP out. So a little bit of a larger risk, obviously, taken into the stock, but it was holding nicely. So we were quite comfortable holding it. And a few minutes later, we sold at 804, I think, was where we got filled. And right near the tops. I mean, 850 was the real top, but the one thing about morning spikes is they don't last for a long time. Okay, like this spike was a cumulative. How 1, 2, 3, 4, 5, 6, 7, 8 minutes. Like 8 candles is where the spike really existed, right? So, really important to recognize that about morning spikes, especially when you introduce volume. Don't overextend your welcome, because this is what tends to happen to morning spikes. Now, this is spiked, and now it's consolidating. So we'll see what happens. Is it going to come and retest the 8s later on? Is it going to blow past the 8s? Is it just going to fade away and be a failed stock, as these typically are? Who knows? Okay. Let's take a look at POLA. So exact same price action. You have the morning spike, which is what we talked about in our watch list. And off of the consolidated area. So a lot of stocks were halting today. So this thing spiked right into a halt, held its halt, and then when it showed it can hold above the consolidated area from 7 a.m. to 9:30, an hour and a half, when it broke out above that, there was a play there. We were busy with SUNW. It's around the same time, wasn't it? 9:41. Yeah, so we're focused on SUNW and totally missed this play. But again, same sort of price action, just faded off the rest of the day. So this thing could spike again, tomorrow, the day after, next week. Who knows? But the point is, recognizing this this price action, morning spikes, they don't last very long. I mean, this was almost $3 a share. It was exactly almost $3 a share in the first 10 minutes, 11 minutes of market open. So really, really important to not overextend your welcome. I can't emphasize that enough. SPI, let's talk about SPI a little bit. I think that was another really, really important one to talk about since yesterday's 4,000% mover. So as you can see, a good lesson to take away here is as soon as the market traders kind of disappeared and the stock became kind of free to trade on its own with the after hours traders, it spiked here from the 12s all the way up to the 22s. Another $10 a share. That could have been made here, and this is your standard short squeeze. Okay, this is where shorts have to finally cover and start buying back their shares to pay off their brokers. All right, so same sort of thing happened again in the pre-market when the market opened up at 4 a.m. and then once again just before the market opened at 9:30 a.m. Okay, so overall it's a short, and no doubt that it's a short, because this thing is not worth $40, and no stock is worth 4,000% higher in a day. Okay, so this thing needs to kind of fade off here and find some kind of a meaningful price before there's any sort of buyers that are willing to buy it. Now, keeping in mind the shorts are still running this down, so there is a high odds of a morning spike, or especially an afternoon spike on Friday. Friday afternoons is usually when a lot of shorts don't want to hold over the weekend, so they might buy back their shares, and that could cause another spike. So SPI is still going to be on our watch list for tonight that we released for September 25th. And we're watching that closely. DGLY and XTRM, let's take a look at those. I mean, overall, not what we were expecting, right? So we were expecting a break of the 290s. This is your standard kind of A, B, C, and then D pattern is what we're looking for. It looked like it was fading off instead, so really no play for us. I guess you could kind of dip by this a little bit in the 2s and sell in the 230s, but not really. I mean, what, 10%, 15%? So exactly if you nailed the bottom and the top, you would have your 15%. but not our kind of play. So move on to the next. XTRM. Same sort of thing. We've been seeing a lot of this with the OTCs. They spike on day one, and then they just fade on day two. We saw it with NWBO about a week back, I think it was. Same thing, like spiked and then faded. And yeah, they just tend to happen more often now. And that's just the market that we're technically in. The market's not really that hot. So, you know, these are turning into rather failed overnight holds. Typically, when you have a strong first push like this, the follow through is usually a bit more powerful, but it's not really been working that well recently. So that's fine. DSGT was another runner today. So we were talking about DSGT not really wanting to fade away on September 23rd, and it decided to consolidate instead. So this could be a great watch for a continuation play with the ABCD pattern on September 24th or 25th, or maybe next week even. Our alert was set to 15 cents, and we totally missed it. We're busy with the client today during that time, so we weren't really trading at that moment. But look at this. I mean, what a beautiful push through through that 15-cent alert that we had put in, which was the previous highs. And, you know, no need to buy the first breakout. Can wait and see how it behaves. And if it can hold above that level, the second push with a bit of volume was absolutely a beautiful play. You get here in the 15-16s and you can sell in the 17-18s. That's your 10 to 15% right there. So really, really nice price action on DSGT. And then, to no surprise, it faded off. So this will be more of a watch again, see if it can break kind of the 17-18 levels. But this likely needs to kind of correct itself now before it's worth looking at. OPTI, another you know, play we're looking at, and it faded away all day, right? Same price action as DSGT, yeah, because it finished near its highs, but it kind of faded off here, and it's, you know, kind of consolidated, and who knows what it's really doing, to be honest. Who knows what this is going to be doing now. It needs to travel quite a bit to get back up to the highs, so likely this is just a fader at this point. Same with NEXT. We're kind of looking at NEXT with the binoculars that you know, it had dipped fairly well off its highs and tested near multi-month support, and if it could hold, that could be a great pattern 5 buy. Looks like you know, contrary to its multi-month support, it dipped through it, so this was probably a better short, but even not that good of a short because it only moved what 30 cents a share. So just overall, no volume, 272,000 shares total traded today, so it's just nobody cares about NEXT today. So no play. CRDF was the one we're looking for a potential short, and couldn't find any shares to short. So we stayed on the sidelines. But what we were looking for, two types of alerts. One would be the break of the 1230s, if it can squeeze more shorts out, or if it breaks past 11, it'll be a short setup if it can find shares to borrow, which we couldn't find any shares to borrow through our brokers today. Consolidated very nicely, so it could be an ABCD pattern, but overall market conditions can cause this to fade. And, you know, this thing just cracked 11 today, and then went all the way down to the low 10. So, you know, easily like that $1 per share short available if there were any shares available to short. So you've seen it multiple times, like it kind of tested the support here. So it kind of looked like it wanted that support. You know, the stocks that test resistance multiple times and finally break out, well, the same holds true for stocks that test support multiple times and finally break down, okay? Again, these are about odds. Nobody can ever tell you what happens to price action. Just about odds and stacking those odds in your favor. JE was the next one we're looking at for a watch list today, and I mean, what a mover on JE. It exploded pre-market to the 90s, and we were talking about it in the 40s off of yesterday's highs. And if you can kind of see here, the 42, 44 cent level was holding all day as multi-day support, I guess you'd call this, between yesterday and today. Intraday support for sure, but for sure multi-day as well between 23rd of September and the 24th. And I mean, this right here, the punch through 44 cents. Again, if you miss this ramp up, never get too disappointed on missing the first spike, because if the stock is worth your attention, it will pull back to that key level, which it did right here. And once you start getting an uptrend, you go from a consolidating fashion to getting an uptrend off of that key level, which is 44 cents. you can consider getting in right here. At least that's what we do, and it would have worked out really well. Enter here somewhere in the 49s, 50s, and sell somewhere here in the 60s, 70s, and potentially in the high 70s and 80s as well. So beautiful mover. Completely, expected. Once again, we're in a hot sector with these energy stocks right now. A lot of them are switching over to greener ways of doing energy. Lots of electric vehicle plays going on. All in all, just absolutely beautiful. So again, today we were asking a question to our VIP group chat about why they thought we were using smaller position size with our trade on SUNW. And two of our very dedicated, smart students answered correctly. One of them was Kieran, and one of them was Jonathan again. Basically, between the both of them, they said that because the stocks are too choppy and too volatile, and because they're going into halts, I think for the stocks at the same time, it was Pola, SUNW, there was a couple more that were all halted at the same time. So I think it was JE as well. No, not JE. We're looking at JE. So Pola, SUNW. Yeah, so this one was halted for a few minutes. SUNW was halted as well for a few minutes right here. And God, what was the other one we're looking at? I forget. Anyway, so there was a couple more that were halted this morning. They weren't on my watch list. They were just on the percent gainers. Nonetheless, so good job, Karen and Jonathan, for answering correctly. When the markets are this choppy, and when the markets are kind of all over the place, where you have a 4,000% mover, you could also have something that crashes just as bad. So the best way to manage your position size is by being very risk friendly and not making yourself wipe out. Okay, if you go into the stocks and put a giant position size and one stop loss triggers you from now wiping out the majority of your account, how are you going to feel about that? Pretty bad, right? So the smart thing to do is when the markets are kind of all over the place, if you want to trade, reduce the position size, and there's still some beautiful profits there. Listen, one reason is the choppiness. That's why we are using small position size. But the second reason is, again, the regular Joe has to relate to this. How do you go to the regular Joe and tell him that with a $100,000 account, we made $10,000 today? Well, no kidding. Anybody can make $10,000 with a $100,000 account. That's a joke. Okay? But the regular Joe needs to see that they could replace their regular income with 660 or 670 bucks in 6 minutes so that they can take this seriously and dedicate to a better way of life. So anyway, good job, Kieran. Good job, Jonathan, for your answers. They both got 50 bucks, so Kieran got 50 bucks. And again, this is how we reward our students. You put in the work, well, you're going to get paid back the money that you invested into getting ahead. Okay? So listen to that again. You get involved in our courses, and we will reward you with cash so that you have a trading account ready to go with money in it. Okay? I don't know of anybody doing that right now. Nobody is doing that, right? Because typically a lot of people will say, come and listen to my webinar and I'll show you something else and I'll upsell you on some dumb course. It's not going to teach you anything. No, we put our money where our mouth is. We're telling you that if we give you something that you pay for, you're going to make money from that. You're going to make 10 times as much as that, okay? So, Karen, congratulations. Here's your 50 bucks towards your trading account. Hopefully you answer more questions correct and stay dedicated, and you'll build your trading account as well. And back to Jonathan. I mean, he made 100 bucks yesterday for answering the correct trivia question on why the stocks like SPI were running. So he talked about how when you have a hot sector in the EV world with Tesla, then Tesla's going to lift all the other boats with it, including SPI. So between yesterday and today, Jonathan has made $150 paid by us. Okay, I can't let that be any more clear. So if you want to be somebody who has a company invest in you and put money back into your trading account so you can start trading, then start getting serious, study up, sign up with our courses, and stop giving yourself a bunch of excuses, okay? You can also leave the middle class, and it's right in front of you, Okay? I hope this inspires you. Study up. We'll see you tomorrow. Have a great night.